Dear friends, the views expressed in this video are not the views of the managing committee, nor is the presentation a solicitation for any investment company. This is an educational video, and it is meant to inform the viewer about the avenues of investing society deposits. All the numbers and the figures are only indicative, so please refer to the official handouts of the society. Dear friends, welcome back. This is the second video, which will help you to form an opinion based on information. As we all know, informed opinion is the basis or foundation of a fruitful discussion. And the general body meeting is a very important meeting where each one of us must come prepared so that we take the correct decisions which are going to affect us in the future. In the previous video, we saw that a cooperative society has to pay 30% income tax on earnings from interest on deposits made with public sector banks or with private banks. However, if these deposits are kept with cooperative banks, then under the principle of mutuality, there is 0% tax that is levied. I'm not talking about TDS, which is tax deductible at source. I'm talking about the total tax that is payable. There was some confusion until a few years ago, but that was settled by a ruling of the Income Tax Appellate Board. The Income Tax Appellate Board, in a ruling on 15th of January 2016, said that the interest and dividend earned by a cooperative society on its deposits with a cooperative bank are not taxed, as it is eligible for deduction under section 80p(2)(d). Those of you who wish to access the judgment can go to the link which is provided below. This link will take you to a page where you are provided with another link which will give you a PDF version of the ruling. So to state once again very briefly, there is no tax on earnings from deposits made in a cooperative bank by a cooperative housing society. So the tax is 0. In the graphic that will now come on the screen, you will be able to see how deposits in a public sector or a private bank compare with the returns that you get on deposits in a cooperative bank. For a budgeted rate of return of 7.5%, our deposits are going to earn for this budget 58 lakhs and 89,000. However, when the yield drops to 6.8% in a cooperative bank like Saraswat Bank, then they are going to fetch us only 52 lakhs and 25,000. Comparing that with a PSU bank, a public sector bank, a nationalized bank, or a private bank, which we saw in the previous video, that earning is going to be just 37 lakhs and 84,000. So you can see there's a big difference between the returns that you get from a cooperative bank and that from a nationalized bank. One question that comes to the mind is, how safe are fixed deposits? There is an impression in the mind of some people that if you have fixed deposits in any bank, they are rock solid investment, especially so if they are with large banks or with nationalized banks. Please take a look at this URL, which is a Reserve Bank of India website. And this is what Reserve Bank explains about how secure your fixed deposits are. Fixed deposits are insured in all banks by a corporation called the DGIC, the Deposit Insurance and Credit Guarantee Corporation. They cover all commercial banks. They also cover all state, central, and primary cooperative banks. Further, they protect all your accounts, which are saving accounts, fixed deposit accounts, a recurring deposits account, and current accounts. One thing to note is that each depositor is insured up to a maximum of 1 lakh rupees only for both principal and deposit. So for example, if a person is having 1 crore in a fixed deposit and the bank fails, the organization known as Deposit Insurance and Credit Guarantee Corporation is going to just insure you for 1 lakh rupees. All deposits kept in different branches or different accounts of the same bank are aggregated for the purposes of insurance cover. So if I am having 10 accounts having 1 lakh rupees each, I am still covered only for 1 lakh rupees if that is in the same bank. If I am having 10 different accounts in the same bank but in different branches, once again, the maximum coverage for one account, one person or one organization which is having an account with the bank is 1 lakh rupees only. Another way of measuring the health of a bank is a non-performing asset or NPA. This has been in the news in recent times, and I'm sure all of you are familiar with what it means. A bank has got a non-performing asset when a borrower defaults. The limit of that is 90 days. So any default by a borrower more than 90 days makes that particular lending into a non-performing asset. It affects the profitability and the credit rating of the bank. It is usually measured as a percentage of the non-performing assets to the total advances that have been made by the bank in the form of loans or credit. There are two measures. One is a gross NPA and the other is a net NPA. In the next few slides, I'll be showing numbers which are relating to the net NPA or non-performing assets. Just to remind you, there are banks which are in big trouble because they have been lending money without serious consideration to rules. And of course, there are some famous people involved in that. And this particular graphic depicts the state banks are suffering because some borrowers have gone underground, or you can say underwater. Let us see how the banks appear when they are compared to each other in terms of NPA. These numbers are for March 2017. These are the top 4 banks when it comes to poor NPA performance. The Indian Overseas Bank has got 13.9% NPA. UCO follows is almost 9%, 8.94. IDBI is also more than 13%, and the Bank of Maharashtra is close to 12%. These are all public sector PSU nationalized banks. Let's see how they compare with the private banks. ICICI is at 4.86, Axis Bank 2.3%, HDFC is less than 0.5%, and Kotak Mahindra is 1.25%. So as you can see, these big private banks are way below these nationalized banks, which we take for granted as being very secure. So their performance is much better in terms of NPA. Let's see how they compare with some of the top cooperative banks. The Punjab Maharashtra Cooperative Bank is at close to 1%. Cosmos is 7.5%. Saraswat is less than 2 at 1.82%. And the Shamrao Vittal Cooperative Bank is just a little over 2% at 2.14%. So you can see that most of the cooperative banks except Cosmos are doing fairly well, and they are quite comparable and in some cases better than some of the private banks, the large private banks. In the next video, we shall be looking at new and smarter investment options. Until recently, cooperative societies had very little option in investment, and that was described under the Maharashtra Cooperative Societies Act Section 70. Recently, in fact on the 21st of April 2017, the Government of India published the Gazette of India, about which we shall talk in the next video. This has opened avenues for cooperative housing societies to make their investments where they could earn a better return. We shall see that in the video that will follow. This is a relatively new development and we shall go into some detail in the next video. So that brings us to the end of this video, and the salient features or the key points that were discussed were that cooperative banks have got taxation benefits because when a cooperative society is holding fixed deposits, the interests on those fixed deposits are not taxed. Then we talked about safety net and how they are insured under RBI guidelines, and it doesn't matter whether it's a private bank or a public sector bank or it's a cooperative bank, the insurance cover still remains the same, which is 1 lakh rupees per depositor. It is not for one deposit, it is for one depositor. That depositor could be having multiple accounts or could be having multiple branches in which they have opened accounts. It doesn't matter. And finally, we also took a quick look at non-performing assets and how the public sector and nationalized banks compare with private banks and cooperative banks. Once again, thank you very much for your attention, and we shall meet again in the next video where we shall be looking at new investment opportunities that have been made available to cooperative societies by the latest Gazette of India notification. So until then, thank you and bye-bye.